There's a person with a poor mindset and there's a person with a wealthy mindset. Don't try to confirm what you're saying. Ask the questions. If you're trying to make decisions to buy an asset or to invest in properties and you're basically always stuck with fear and then you have confirmation bias on top of that, what are the chances of you making a really good decision? Hello and welcome. My name is Gino Barbaro, one of the co-founders of Jake and Gino. And in this how-to video, we're going to be discussing how you can become a better investor by looking at your cognitive biases and not falling into the trap of having one of these biases. Now, I read a book by Dr. Brad Klontz. Read it a couple of weeks ago. The book was called Start Thinking Rich. And I love these kinds of books because Dr. Brad in the book does a phenomenal job. He makes it simple. And his story and his co-author's story, they're just tremendous. They really resonate with me because they both started from humble beginnings. They weren't born into wealth. What they did, though, is they started focusing on their mindset. Really, there is no such thing as a poor person or a wealthy person. There's a person with a poor mindset and there's a person with a wealthy mindset. But that's not what this is going to be focused on, this podcast right now. This is more of a teachable podcast where right now, I want to go into these cognitive biases and see if you're falling into one of these. And it's really important. If you do, this can really hamper your ability. I don't want to say just in investing. That's what we really focus on, how to. That's what Jake and I really love to talk about. But if you have these biases in your life overall, they're really going to hamper your life. And what I love what Dr. Brad talks about in the book, he talks about fear. And what I love, there's a passage in the book when he talks about when we are confronted with that fear, the frustration, our brain is wired such that we sort of look for that. And that's why the media does a phenomenal job of keeping us scared, keeping us afraid. It's clickbait. We are attracted to it. That's how we've evolved. But when that happens, the frontal lobe of your brain decides just to shut off. All of a sudden, we start making decisions, I would say, poorer decisions based on that. We can't come up with rational or logical thought. Now, you see people with TDS, Trump derangement syndrome. It's pretty funny. How can somebody so elicit a response that you cannot have a rational conversation with that person? Now, I understand whether you like them, you hate them, I get it. Can't you at least have a conversation about something you vehemently disagree about? Well, most people can't because they fall into that trap of their frontal lobe just taking over. And all of a sudden, rational thought, logical thought goes out the window. I mean, Bill Maher was a great example of that for years. And then what happened? He decided to show up and actually have a conversation with Trump. And in that setting, all of a sudden, some logic and some rational thought came back because his biases, I think, on that meeting tended to go away. He got it from the horse's mouth. I mean, the fact that Bill Maher said that he was amazed that Trump laughed. I mean, where's Bill Maher been for the last 8 years? Has he been at a Trump rally? Has he watched Trump? Trump's laughing a lot. Now, that's why it's important. This very first bias, it's called the confirmation bias. And I think that's what Bill Maher has fallen into. And a lot of us have fallen into. All of a sudden, we believe something about somebody and we're going to fall into that bias. And we're looking for confirmation. So the internet does a phenomenal job of this. It continues to feed through their algorithms things that confirm our biases. If you're watching Fox, you believe one certain aspect. If you watch CNN, you believe another certain aspect. If you're into this media right now and you're talking about tariffs, all of a sudden, all you're hearing is tariffs are bad, tariffs are terrible. But if you rewind in the last couple of market cycles, the Democrats were talking about tariffs as this wonderful tool. Now somebody else is proposing it, it's a terrible tool. Now, I'm not here to tell you whether the tool is terrible or whether Trump is terrible. All I'm saying to you is check the bias that you're coming into. I mean, Ray Dalio says it best. It's blind spots and egos that will get you, that will torpedo you. If you're continuing to have this bias, I mean, the fact that the media thought that Kamala Harris was going to win shows the confirmation bias on their part. This is just the corporate media, the legacy media. They had no clue. How could they have a clue? They had their own confirmation bias. They were sitting there thinking and talking to each other and feeling good and rubbing each other on the back and saying, yeah, we got this. When most Americans were like, I wouldn't say most, but I would say more than 50% of Americans were like, well, we don't really believe that. So when it comes to investing, confirmation bias can be very challenging because if you think that this asset is good and you think that rents are going to rise and you think that inflation is under control, you're looking for things to make yourself look right because we want to all feel good. Just check yourself. If you watch one certain news, if you're reading multi-housing news, read another document. If you're reading the New York Times, go out and read the Wall Street Journal. Get different opinions. Don't try to confirm what you're saying. Ask the questions. Well, what happens? I believe rents are going to go up 3% this year. What happens if they only go up 1%? Let me find other people that are sharing the other side of the story. That will make you a much better investor. That's how you limit the downside risk, is by going out and finding differing opinions, differ than you. And if you see yourself tightening up, getting angry, remember, the frontal lobe, rational thought goes away. What I'd want you to do right now, I want you to test this theory. Think of a time when you had a conversation with somebody and you got really mad, really angry at them. I mean, I could think of dozens of things. Getting mad with my kids, that overwhelming fear of anger, get really pissed. I don't have a response. Nothing comes to me. I walk away. 10 minutes later, a thought pops into my mind and I say, man, why didn't I say that 5 minutes ago or 10 minutes ago? It's because you're in a state of catabolic energy, negative, draining energy. No thought, no possibilities there. As you extracted yourself from that situation and you were able to calm down, all of a sudden the possibilities came about. So just be aware of what Dr. Brad says and how I've described this. If you're trying to make decisions to buy an asset or to invest in properties and you're basically always stuck with fear and then you have confirmation bias on top of that, what are the chances of you making a really good decision? I would say slim to none. Now, this next bias, I didn't really know what the name of it was, but once again, I was watching CNN and Mr. Wonderful, Kevin O'Leary's there. Love him or hate him, he owns over 40-something companies. He's been doing business for 40 plus years. He was having a conversation, or he was really getting yelled at by somebody on CNN who was probably 30 years younger, was an academic, probably never ran a business. And she was trying to lecture him on tariffs. And he's talking about tariffs in China and how they cheat and this and that. Now, I'm not picking a side, but this next bias called the Dunning-Kruger Effect. It's when people overestimate their abilities or their knowledge. Now, this person clearly was. Mr. Wonderful has 30 years of experience on this. He's in the trenches. He's been doing this. What it seems as if is when people really think they're a lot smarter or have a lot more experience or a lot more knowledge than they actually do, those are the ones who scream the loudest. Those are the ones who are telling us that inflation is transitory. Those are the ones who are telling us that now is the time to buy a deal. Those are the ones who are saying bridge debt's a great idea. Those are the ones who are telling us to buy Bitcoin at 100,000. Those are the ones who are telling us right now about tariff policy. Be careful with this, because I've seen this over the last 3 or 4 years in multifamily real estate. You have newer people in the business. They haven't been through a market cycle. They think they know more than what they actually do, and that makes them very risky. It's really interesting. If you're falling into that effect, just pull yourself back. I know it's ego and pride again. Listen to the Mr. Wonderfuls of the world who have been around. Remember, a smart person learns from their mistakes. You're looking at one of the smartest people around because I've made a ton of mistakes. I've fallen into this Dunning-Kruger effect multiple times, especially when I was younger. Now, as I've gotten older, I've learned to listen more. God gave me 2 ears, and talk less. God gave me 1 mouth. And when you do that, you're trying to get as many perspectives. Remember, in those shows, the confirmation bias is so great that the rest of the panelists were sort of ganging up on Kevin O'Leary. Their biases were on display, and he's just talking from experience. Now, if you have the Dunning-Kruger effect, you may or may not know it. Just understand that it's very difficult to make money in real estate if you've just started out. So the idea is to try to latch onto somebody or try to learn from somebody who's done it. Smart people, once again, learn from their mistakes. Wise people learn from other people's mistakes. And if you can do that, you will avoid the Dunning-Kruger effect. Now, this next bias has bitten me several times. It's called the sunken cost fallacy. You see it a lot in stocks, in real estate as well. Basically, you've bought a stock at $10. You like the company. All of a sudden, the stock goes down to $6. And you're saying to yourself, should I sell or should I double down? If you think, remember Dunning-Kruger, really know it and don't think, and the confirmation bias, trying to confirm what you think. If you have the facts and the figures to say it's a great buy at 10, I like it even more at 6, then buy it. But most of us hate the fear of loss. We've already lost 4 points on this stock. I'm going to double down and I'm going to buy more. And that is a huge mistake. It's the same thing in real estate. You go out and you buy a deal for, a home for $300,000 and you bought it in the wrong part of the market cycle. And things are starting to reset, and the value drops to $260,000. Now you have a decision to make. Do you sell it and lose $40,000? Or do you double down, hold it, continue to negatively cash flow, and pray that the market rebounds? That's really a difficult decision to be in. Now for Jake and myself, it worked a different way. We had bought a deal. It was over almost a $15 million deal back in 2019. It was a syndication. We had bought it with some expectations of it being in a better area, better location, better resident base. That wasn't the case. We were fortunate that the market elevated. We did a good job in raising rents and running the property. NOI did expand. Cap rates also fell. So it helped us out. At a certain point, we could have said, we're going to hold on to this thing. It just didn't make sense for us because there was so much work involved and we knew that we'd maxed out the value of the property. We could have said, no, we're going to double down and continue to hold this thing for the long term. But we didn't fall into that trap because I had fallen into that trap several times. I said, Jake, now is the time to sell. And we sold the property. Thankfully that we did that. So understand when you're investing, if you're losing money, is there a point when you take some chips off the table and you say to yourself, I made a mistake. I learned from that mistake. I'm going to cut my losses. At a certain point, that may be it. Just be aware if you're fearful, once again, and your frontal lobe is not allowing you to make rational decisions, you may fall into this trap. So be aware. This last one is where we are right now. It's called the herd mentality. Now, I fell into this back in 2011 the other way. The herd mentality basically says, let's follow the herd. So what did the herd do back in 2011? Everyone was afraid of real estate. There was nobody investing in it. Now, looking back, if you had asked everybody today, would you have invested in real estate back in 2011? Everyone unequivocally would have said, yeah, no brainer. But they weren't doing it because they were following the herd. What did people do in 2021, 2022, 2023 in multifamily real estate? They followed the herd once again. Cheap cost of capital, a lot of money flowing, a lot of deal transactions. The herd was buying deals. Was it a really good time to be buying deals, especially on short-term bridge debt? Probably not. And that's what we see right now. And now the herd, once again, is shifting and saying, well, now's not a good time to buy. Interest rates are high. The economy is terrible. Tariffs, we don't know what's going to happen with tariffs. Check what the herd's doing. And maybe you do the opposite. And a perfect example of this is a gentleman named Sam Zell. Sam Zell, his nickname was the Grave Dancer. Back in 2008 and 2009, when everybody was running out the exits and everything was going on fire, for him, it was a fire sale. He was buying assets on 30 to 40 cents on the dollar. He was the grave dancer. He was dancing on a lot of dead deals and buying those deals. Now, I say this to you because right now, you have an opportunity in the next 18 to 24 months to shift yourself out of the herd. And instead of exiting the building, I want you to enter the building. There's an opportunity coming in real estate. Interest rates have nothing to do with it. If a deal pencils out at 6.5%, it's going to do even better at 4%. So don't follow the herd. If you're serious about getting into multifamily real estate or any type of real estate, now's the time to be doing two things in real estate that everybody needs to be doing. You need to be talking to investors, which is sourcing capital, and you need to be looking at deals. Those are two things that you should always be doing. But the herd mentality says, well, why would I be doing that? Doesn't make any sense. There's no deals right now. And that's what happens. When the opportunity comes, these people aren't ready. I'm challenging you right now to start getting ready for this next opportunity that's coming in your life. The herd mentality. And we have it in many areas of our lives. Look at all the different diets and the different fads going on. One day it's vegan. The other day it's carnivore. Now, I'm not saying one is right or wrong. Understand what works for you. That's the important thing. Don't just follow the herd mindlessly. And for me, my whole life has basically been going against the herd. I started homeschooling my kids over 20 years ago when it wasn't the cool thing. We got into organic and natural foods years and years ago when it was just a catchphrase. I was going against the herd. Now what's happened? The herd has shifted and the herd has caught up to what I'm doing. Blaze your own trail. The internet is such an amazing tool to get knowledge on what you're trying to accomplish. Now, as I wrap up the show, I want you to go back and listen to all these biases. And as you're going throughout your day, catch yourself. Are you following the herd? Do you think and are you estimating your abilities a lot more than what they are? I do this often. And what I've been able to do is I've been able to lean on experts. I mean, can you imagine someone in their 20s and 30s trying to do their own taxes? I'm not saying it's a right or wrong thing, but is your time more well spent to be doing something else? Shouldn't you hire a certified public accountant or an accountant to be doing that task? That's not your job. You're not an expert at that. I know you're trying to save money by doing that, but I will almost guarantee you if you get help doing your taxes, especially if your taxes may be a little bit more complicated, and you go out and find a preparer to help you, that few $100s that you pay them is going to come back to you. Don't overestimate your abilities in certain areas unless you've put in the work, unless you've done hundreds and hundreds of hours on the work. And not only just done it from an educational standpoint or from a standpoint of having theory, actually doing it brings it to a different level. Now, I want to thank you for spending part of your day here. These biases are so important. Check yourself on these biases, and I will see you all on next week's How To. Thanks, everyone. Thanks for tuning in. If you enjoyed today's video, be sure to like and subscribe so you'll never miss another episode.